Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's June 16th. This is going to wrap our week up. No chart lesson for tomorrow. I'm not doing any on Fridays for a while. But really good trading day. Lots of volume, lots of trades here. There's a few more green ones today, but we had a really strong trend down, and then it simply reversed, and we had a really strong trend up. This is really a two-tiered channel here. I made this one, there's just to keep this from getting too cluttered, I made this one a little thicker, and I'll probably remove these lines or take them off as we go through the chart list. I think when I back out it won't look so cluttered, but once we started down, I was really looking for a measured move, possibly like that, and that would have put us down to 235. But notice we didn't make that, and when you don't make a measured move like that, generally if it starts trending in the other direction, you're going to have a pretty strong trend. And I would really probably call this a reversal type day because this continuation, this downward move early on was a continuation from yesterday afternoon, and then we found support right in here around this 2045 area across here, and we reversed, and it was all uphill the rest of the day. And there's short-term trends and so forth within this larger two-tiered channel, but you really didn't need the two-tiered channel. It didn't come into play until right in here, and you had enough reasons in here anyway to trade this stuff. So we'll talk about that when we get to it. So you really didn't need this. The only thing that might have helped you here is uh, maybe with this trade if you didn't understand what was going on otherwise. But by the time it really, the midline was really coming into play up in here, but this is too late in the day. And so it wouldn't have helped you except for maybe this entry right in here and knowing where to exit up here, but you probably wouldn't have this confirmed yet. So I doubt you would know this was even up here until prices got there. So it doesn't really help you today. But I still want to point it out. So you know, once it's there, you should be paying attention to it anyway. So, but let's back out. We'll back way out here. Talk about the trades and go from there. Trying to back far enough out where it's pretty obvious where you can see what's going on here. But we had this two-tiered channel working down here early on, and you could have had that pretty quickly off these highs here. You can see it right here when it came in and touched. So you would have had you already have three touches up here, but this definitely would have confirmed it. And so at this point, we're looking for prices to come down to the lower side, and notice they don't touch till way down here, and then it's not long till after that that we get a break and a reversal. So um, that might have kept you in this trade long enough, but you can see um, we were we traded down into this. There's a trading range going across here. You can see it. We traded down into that, and normally the rule is if you trade down into a range, then when you break out and actually succeed, you'll break out to the downside. And that might mean that you get a couple of traps on either side. But a lot of times, if you can catch these traps, this was a little bit before too early, but still you've got a trading range here that you could have caught. And if you catch this, a lot of times you'll catch the high of the day and you can trade it and, ride it all the way down or all the way up if it's off the bottom. So you got to pay attention to those. I love those setups. So, um, but anyway, early on, this is actually the extension down. So early on, we were paying attention to this trading range here, and really, I was looking at this as your lows down here. Let's just copy this one and bring it down. So this would have been your target area right here. And you can see that. Actually, I had it a little bit higher because you got more touches and closes right along there. So, um, but anyway, we're trading down to the bottom here, and you get a second entry short here with a little two. There's only two ticks in that bar. It's a little bit close to here, but this is your actual low. At that point, I would have had this probably still down here. There's enough room to get out there. I like that one for a short. Notice that there's a new high here, first entry, then it turns down and goes higher again. So it's like a failed second entry long, but most importantly, it's a second entry short with a just two ticks there. And I liked waiting on this bar and letting it break lower and then dropping your stop. You actually have to use a limit order and letting it come back where you originally would have got filled, and you could have gotten filled on that one. But you could have used a stop there all the same. It's a little more risky using a stop because you don't have a lot of room to these lows, but this was the ones you're more concerned about really over here. And then it tries to come back. It makes a lower high, and you get, it's almost a repeat pattern. You get another little two tick bar right in there. Actually, this one is more than two ticks, but this one I think is actually three ticks. So this one's probably four. I've narrowed in so much that it looks like two ticks, but it's not. But it's still a low risk entry, and this is even lower risk, like one tick less. So. And I like just going short below that. Again, it's a second entry. Notice the new low, pull back first entry, pull back second entry. It's right off the EMA. And we're still in this down channel, and we're looking for prices to go to the other side. It's really hanging up in here, but you notice we're making, your key here is you're making lower highs every time, and you're really making lower lows too. So that'll keep you in it. And then we come back to the trend line here, and you can see that's a very valid trend line, and you get that real bearish bar. And this is almost like a breakout pullback. It's a second entry short. Notice the new low, pull back first entry, pull back second entry, and we actually drop below and make a new low. So it's like a little breakout pullback short, second entry right off the EMA, right off the trend line. Great place to enter, really. It's a little close to these lows, but this is a big downtrend, and it's a breakout pullback short, and you got all those reasons to go short there. So I like that trade. It took it a few minutes to get going. I didn't like adding, when it didn't go straight on through pretty quickly, I didn't like adding on, although you could have considered adding on right here, but that's just so neutral right there. And that one's so neutral, and you're kind of going sideways. So I would have waited, but you could have considered entering here. It probably could be green, but it's so close to that lows, I'd just skip it. And this thing really takes off. You really needed to be in here, and this thing just takes off. And this is a double top, so you can count that as a new high. You're pulling back, you get a first entry. You go down, you get a second entry long right there, and it fails. But before it turns down, it ticks up again and gives you that little trap. And again, you got a real small, low risk entry right there. I did make this one green because it's not back to the trend line. There's actually some resistance right across there as well. You can see that. And if you caught this one, you would have caught a runner on this one as well, and you can ride this one. And when it touched right here and started going sideways, I would have exited. It did push down another tick or so, but I would have just got out there expecting a bounce. And of course, it does bounce. It goes to the other side, but look what happens. You got a new low. You're pulling back first entry, second leg, and that's two measured legs. And notice how we, even though we touched here, we got that little gap right in there. We kind of overshot it about an equal distance. And that's what you kind of, or that would be kind of a clue that, hey, we may get a break here. And if you draw this trend line, you get a close and a new high, and you get a pretty bearish bar here. I would probably let it, you really could have used a stop right here. So you might have waited on this one, let it break lower, and then put a stop back there where it was. You may not have got filled that way on a limit order, but this one takes off again, and notice you got your break. You get two legs down to a new low, and it reverses, and that's two measured legs. So people always ask me, why would you go long down there in that counter trend? But it's not really because you've got your brake and you've got two legs down, and you've actually got a little bit more than a measure leg. There's leg one, there's leg two, and you see we got a couple of extra ticks. And really what you're hoping for is to catch the low of the day here, but at the very least we're just looking for it to snap back to the EMA and ride it back. And you can see that's a reversal bar. There's two in a row. This one closed on its very high. I like just going long on a stop right there. It's a quick, easy move, but if you caught that trade, you caught the low of the day, and any runners would have been safe, and you could have, I doubt I would have stuck this correction out here, but you could have at least ridden it up to the top here. And you just clone that line and drag it up. I'm going to get these lines out of the way because it's really cluttering it up here. And this is all I was looking at. So that's a nice trade. It's a little aggressive because you are trying to catch a bot, pick a reversal. But if you see what's going on there and you understand it, you realize that's a pretty good setup because it's so far away from the EMA and all your reversal. You've got everything in place for your reversal. So, but notice your new low. You're pulling back first entry, pull back second entry. Second entry short there, but notice how we shot right through the EMA. We're pulling back. This is what a reversal pattern looks like. Pulls back, and you probably wouldn't have had this here, but you could be looking for a possible trend line up through here. I just kind of drew it off that close and that bar there, and but that's a nice setup right there. I like going long. That's your reversal pattern, and you're looking for at least another leg like that one, but this thing takes off. And if you entered there again, you would have had runners. This is a double bottom, so this is really a failed second entry short. I didn't mark this one because it's right there at those highs. We're too far away from the EMA. We're overdue for a little pullback. So I think you got to skip that one, and notice it pushes a little higher and then it pulls back, and it gives you your third separate touch of this trend line. It confirms it. It's a nice reversal bar. Just go long right there, and it pulls back here and gives you another touch of it. So I really like adding on there if you want to. And again, any runners would have been safe on this entry, either one of them. And it just takes off. And where does it go? It goes to the other side. You don't really necessarily know that the other side is here until it confirms it, but you got a good idea. You just kind of go to the top of each of these. You might have had it right there, but we just shot right on through there. And you see some people were looking at it there, and when it does that, just go to the next one. You just at the close there and look where it turns down. It's tempting to go short there, but this is a pretty strong rally on a reversal. So it could easily, notice that little shorter term trend line. That's the first break. There's no new high. So this thing could have easily broke and turned one more high. So I don't think you want to go short there. I think you're better off to sit tight. And you're working down. You get a break and you get two more legs down. But you never really get a good setup here. This one is tempting, but it's not far enough away from the EMA really yet. For my taste, and then this one's not bullish enough. And then again, it looks like it's going to turn back down, and it turns up, and you kind of get your trend line set right across there. I originally had it a little higher like that, but I moved it down when the close was there, and that does turn out to be the right spot. But the reason I like entering here, and this is a green one, is because it's just a little two-tick, small, low risk. And guess what? If you entered there, you really your stop almost has to go down here. But I like risking that one with the stop just a tick below that, just because it's two ticks. It is aggressive, so that's why it's green. But if you catch it, you can ride this one all the way up. There's a trap here, but again, you're right back up into the resistance. You've had your break. You're pushing to a new high. You have enough room there. So if you want to be aggressive, you can go long. But I'm not. I just couldn't give that one a blue one. I think it's too risky. And it does pull back here. But notice you've got a break of this and a new high, so this is risky entering on a first entry. And if you draw your short-term trend line down through there, there's no break and retest yet. So again, there's just not a very good entry. But we take on off, and notice how we don't get back up to the upper side, and we touch this one, and now we've had the break and a couple of moves up and a big bearish bar. We're way away from the EMA, so I like taking that short right there, hoping that you catch a reversal. And you catch a nice move, but it bounces right here again. When it does bounce, notice that trend line, and you get a little close outside. It tries to go lower, and that's all holding there. This is kind of a neutral bar. What I would do is let it break above on this one and drop a limit order back in here somewhere. You really wouldn't want to enter that one with a stop. This one could almost, really probably should be green. But the fact that we got back in there and that trend line is held twice, and you get that little trap right there, because I guarantee you some more people got short right there. I'm going to leave that one blue. And then, of course, we make a double top. And again, you got this little small, low risk entry. It breaks higher first and turns and goes out. Just go short right there. Just put a stop, thinking you can ride it back to the EMA. And we find the support here. It bounces. And now you got a double test of this high. And you're looking for a possible reversal anyway. Or a correction anyway. A correction doesn't always mean a reversal. It could just go sideways like it did here. And this is the correction before we start the trend back up again. So understand that we got a break in a new high, and we do have a correction, but it's just going sideways. And so we get the double test rule, but this bar is so big, you don't have a whole lot of room to get out. It's kind of risky, even though it does meet the rules. So I drew it green, and then right in here, we're just kind of chopping sideways. We're making lower highs here, so that's your clue that we're probably going to break out here. This was the first failed break out of this range on either side, really, and it breaks out to the low side. So I like going long there. You get just enough for a scalp. It's actually a pretty easy scalp. It gets quite a bit more than you need, and it turns back down, and it's just kind of going sideways, and then you get this. I don't have a line on here. Let me put a line on here. You can see that support right there, and you get that little failed break and this little inside bullish bar. I like going long right above that. And this is a double top right here, so it could be a new high. You're pulling back first entry, pull back. It's a second entry long. You got a little trap here. I like this one, hoping this is going to pull back inside and maybe go back to the upper side. And you actually could enter here, but I think you're better off to wait for the trap. This is where, notice how it shoots back through the EMA and pulls back and tests it, and you get this bullish bar. That's a reversal pattern. So technically it could be green. I'll go ahead and give it a green one. But I think you're better off to wait and see if you get the trap, the reversal pattern, the failed second entry short, and notice you get that right here and it reverses. That's the spot to go long. And again, you catch an easy one. Any runners are good. Pulls back. This really just sets your trend line, these first couple here. So you don't really have a confirmed trend line until here. So, and then you get your failed second entry short again here. So a chance to go long. But look how we're stacked up. Look how bearish that bar is. It's a trap, so it doesn't have to be a perfect bar. But being that it's right into that resistance, support resistance right there, I think it's a little aggressive, so I only marked it green. It's so late in the day, you don't want to get trapped there. Now, if it would have turned down, broke lower here and turned up and went out the other side, I'd said enter there with a blue one, but it doesn't. It just kind of goes sideways and it breaks up and pulls back. And notice this new high, it pulls back first entry, pull back second entry, and you get a great signal bar. If it wasn't after 2 o'clock, I'd say enter right there, and you could have ridden this one on up. And you do have your close outside and move to a new low. That's textbook right there. So really good trading day, lots of entries. Um, it was mostly all downhill and then mostly all uphill. The only reason I have these couple of shorts in here is because we do have a break of this shorter term one. Um, and this one actually, another reason I like this one right here is because that's where the trend line from the larger two-tiered was. And if you draw that up through there, you can see it right there. Bounces right off of it. That one actually bounces off of it too, but I would have waited on that trap there because everything's still below the EMA. So um, just make that one solid so it's easier to see. But yep, really good trading day. It looked like it may be going to be a trading range at first, but there's your overnight high, and it held us short term, but we ended up going on through that and staying above that. So in the end, I think it was a reversal day. I mean, really from 9:30, we rallied over almost 30 points, 20 something points, and that's a pretty big range. Even though there are days where you have 20 and 30 point ranges, but look at all the volume. Look how many bars today. Lots of trades. So the volume's really picked back up. Volatility seems to be increasing. Um, Sometimes that's a little bit overwhelming for people when they've been used to the slow stuff again, and they're new, especially when you're new. So, but this is, once you get used to this, this is what you want to see. You like to see this volatility because all you got to do is catch one or two of these trades with these big moves like this, and you can really almost, depending on what your goals are, you can catch one and definitely two and make a really, make a lot of money in, just a short period of time. And that's what I like about them, about the volatility. Even on a slow day, you can get two or three trades and make a good living. But when you can catch a trade like this and get 8 or 10 points, or catch one of these lows and get 8 or 10 points, or 15 points, or depending on what kind of trader you are, if you like to hang on to them. Personally, I like to exit where I think, logic tells me that I should exit based on the price action and then look for a new entry. And sometimes, most of the time, I'm right. Sometimes I miss a big move though, but you almost always get a chance to get back in again. So, and I just hate to see, catch a move all the way up here and then try to hang on and get stopped out here and then watch it go. So I like to exit somewhere up here near where the expected highs are, where the measured move is, where the upper trend line is, or whatever, and then look for a new entry. So, but everybody's, that's why I don't talk about that a whole lot, because everybody is not as comfortable. Some people are more comfortable hanging on to, taking one trade or two trades and hanging on to it as long as they can. Where me, I'm pretty good at picking the entries. So I prefer to exit with my profit and then look for a new entry. But you want to do what you feel the most comfortable doing. So, and if you're not comfortable or not really good at picking the entries, when you do get a good one, you want to hang on to it. So, that's why I don't have a specific set and rules on exit. It's more personality driven in my opinion. And so that's the reason I try to encourage people to do what they feel the most comfortable doing. Hopefully that makes sense, and I'm not rambling here, but some of this is personality driven. So, and definitely the exit part of it, because if you're not comfortable and you're nervous or you're questioning yourself, you're going to make mistakes, and if you make mistakes, you're going to mess up and lose money. So you want to be completely comfortable, and my comfort zone is seeing a nice profit, taking it at a logical spot, and then looking for another entry. But if you're not real good at picking the entries and you're uncomfortable getting in and out and you like hanging on, then hang on and move your stop to logical points on the way up until eventually you get stopped out and you can ride them longer. So go with what works for you and what works for your personality and what you feel comfortable with, bottom line. So but I'm going to wrap it up for today. This is going to wrap up our week. I hope you had a great trading week. We'll be back again Monday to start again, but I'm done for the day. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.